Today, we're diving into the mind of one of the world's greatest investors. We're going to try to uncover the simple, yet incredibly powerful principles that helped build a fortune worth billions. But what if I told you the secret to all that wealth wasn't some complex formula or some kind of insider trading tip? What if the whole strategy was just hiding in plain sight? Because really, the truth is, the core of Warren Buffett's philosophy isn't a secret algorithm at all. It's a mindset. It's a way of thinking built on three simple but powerful pillars: patience, discipline, and good old-fashioned common sense. Now, our guide for this entire journey is the Essays of Warren Buffett. It's basically a collection of his letters to shareholders. And I promise you, this is not some dense, boring financial textbook. It's more like a masterclass in just thinking clearly. You see, what makes his approach so revolutionary is just how accessible it is. Buffett has this incredible knack for cutting through all the jargon and the complexity of finance. He uses simple stories in plain language that, honestly, anyone can get. He just untangles the mess for us. All right, so what's the big idea? What's the one concept that holds his entire philosophy together? Well, it all comes down to something called value investing. But it's really important we're on the same page about what he actually means by that. Here's what it boils down to. You're not just buying a stock ticker that blinks on a screen. You're becoming a part owner in a real, living, breathing business. The whole point is to find a fantastic company, buy it for a fair price, and then just plan to stick around for a long, long time. You're buying a piece of the whole operation. And this right here, this is the huge difference in mindset. Most people get totally wrapped up in trying to predict the market's next move, which, let's be honest, is a loser's game. Buffett's focus is completely different. He's just asking, is this a good business? Do I get how it makes money? And maybe most importantly, will it still be a great business 10 years from now? So you can really break the whole process down into these three simple steps. Now, it sounds easy, and in a way it is. The hard part isn't understanding the steps. The hard part is having the discipline and the patience to actually follow them, especially when the market starts going crazy. But here's the thing. None of this works without one key ingredient. And it just so happens to be the single greatest advantage you, as an individual investor, have over all the professionals on Wall Street. That advantage is time. Time lets the magic of compounding really get to work. You know, where small gains, when they're reinvested over years and decades, slowly grow into something massive. While Wall Street is totally obsessed with the next 3 months, you have the luxury of thinking about the next 30 years. That is your superpower. And look, during that time, things are going to get bumpy. Markets will go up, and they will definitely go down. That's a guarantee. But Buffett insists that the real danger isn't the market crash itself. It's how you react to it. Your own emotions, fear and greed, are way more destructive to your wealth than any stock market downer ever could be. So how do you conquer those internal demons? Well, it takes character. And this brings us to another layer of Buffett's thinking that is just so critical. It moves beyond the numbers and really focuses on the people. For him, this isn't some side note. It's absolutely central to everything. You have to remember, he's not just buying assets. He sees it as partnering with management. He's looking for leaders who have integrity, who love the business, and who think of their shareholders as actual partners, not just faceless names on a spreadsheet. Because a great leader will protect the company when times are tough and invest wisely when times are good. And this quote, wow, it just completely flips the whole idea of risk on its head, doesn't it? For Buffett, risk isn't just a stock price going up and down. The real risk, the kind that can permanently destroy your money, comes from one thing and one thing only: not knowing what you're doing. It means you gotta have the humility to admit what you don't know. Now, here's what's so cool about all this. These principles, they aren't just for the world of finance. At their core, they're really a blueprint for how to think rationally and, well, live a successful life. You can see these three ideas in pretty much everything he does. First, keep things simple. Focus on the few things that really, truly matter. Second, practice humility. Know your limits and be okay with learning from your mistakes. And maybe the biggest one of all, only operate in areas you genuinely understand. He famously calls this his circle of competence. And the point isn't about how big your circle is. The whole point is knowing exactly where the boundaries of that circle are, and then having the discipline to stay inside them. And this applies to everything: your job, your hobbies, and of course, your investments. So, as we start to pull all this together, I hope it's clear that what Buffett teaches is about so much more than just picking stocks. It's really a framework for making smart, rational decisions, whether that's in your portfolio or just in your life. If you boil it all down, the message is pretty straightforward. Learn to think for yourself and cut through all the noise. Have the patience to let your plans actually play out and focus on building real, durable, long-term success, not chasing some short-term thrill. That right there is the essence of the disciplined mind. And that brings us to the end. So, as you think about these big ideas, patience, discipline, and long-term thinking, I'll leave you with this question. What's the one idea that really stands out the most to you? Drop a comment below and let's talk about it. Thanks for watching, and I'll see you in the next one.